All right, guys. So market's live right now, February 11th at 12:45. So I just wanted to go ahead and let's line this up right here. And I just wanted to take some time to really go through this while the day is still moving, so we could really watch this. And let me see if I could get this to line up. So this is 50. So here's 50. Let's get this a little bit lower. And I guess we'll just get rid of this. $50, a little bit higher. Boom. All right, here we go. Now, let's add one thing here. Okay, because we want to see that vol trigger. And of course, that screws my size up. Why wouldn't it? 50 is right at the S. Okay. 50, 50, right? Lines up. Here's the vol trigger, more or less lining up with this, right? So crude but close. So what I want to show you guys is look where this is the title of this video is going to be not all negative gamma is created equal. Put call parity does not matter. Wow, this is going to get a ton of backlash. I'm telling you right now. They're going to come out and try to shoot me for this, especially from the hardcore market maker guys that are real big on put call parity. So yes, put call parity. That's why this happens, and you get strikes that they have some short gamma, right? Trader short gamma. They have some trader long gamma. It evens out, right? And you get the sum of the two. You coming down to these negative gamma strikes, and you're like, why are we bouncing off of, the middle of them? How are you supposed to pick where support is when you have 5 rows of pink, right? How do you figure that out? So check this out. Let's go back to net open interest. The calls, right, that took us lower, they did try to form a little bit down here. I wish I could turn this window off, but I can't. If you notice, right down to here to 30, right, they started popping up. So, and that was on this push down. So I went ahead and actually tried to get short for the second time when I saw those calls adding, because those calls will add and they will take over the puts, and then you'll get some room to move. The hedging response for that is going to be different, apparently, which is really a head scratcher for a lot of this stuff. And I'll tell you what I don't do is I don't lose my mind trying to figure out why it happens, because we just don't know what these dealers' books are like. They could be having single stock stuff against it. If you Chris Abdelamessi, he talks about gamma modeling and how extremely difficult it is, especially outside of longer tenors, which is why spot gamma has such great success, because the model is for 0 DTE, where it actually can be done, right, properly, where the assumption can be made that they're hedging 0 DTE with 0 DTE or some futures, right? We don't have to worry about them offsetting something 6 months out with some other index or whatever, right? So this is a lot cleaner. That being said, all right, let's go back to 9:30. This is what the market looked like. We got a number that popped, okay? I got short right after that number came out. I ate it for a little bit. As soon as the market opened, I added more to the short. Tech was getting killed. You guys know I trade correlation. So if the SPX is popping, right, because traders that don't trade correlation have no idea that the heaviest weighted stocks in the sector are getting murdered, right? That's my signal to fade them. And so I do that. Boom. Here we are, 940, all right? Where do we stop? Where the long puts begin. I'm not making this up. I'm sharing this with my colleagues. Here we go. Next update. 950. Struggling here, right? But what do we see? These puts, where we struggle, what happens? Calls take over, right? Now, let's keep playing this out. 10 o'clock. What happens? Puts are leaving, calls are adding, okay? I'm going to wrap this all up together in some psychology. I'm not going to make this long. What's happening? Calls adding, puts leaving, okay? Traders are trying to buy these dips in the morning, okay? Unchanged was right here at 40, 39. So in this picture, we're almost there. In trace, we're almost there, right? The vol trigger is actually at unchanged. So we're almost there, okay? And look what's happening. Puts are closing, calls are adding. So now let's take a quick second to tie in some psychology. So what is a great day, right, to stay short? Great days to stay short are days where you have dips that could be bought, okay? When these dips could be bought, traders are likely to add calls here. They're not going to get short on this. They're going to try to buy this dip right here. That's going to bring the market lower. Why? Because long calls, that's what they do. Refer to the Vanna rally video. A whole hour of this. Let's get to the next one. 10:20. What do we got? More calls added, right? So here was your bounce. They tried to buy that bounce. They added calls, hedged lower, okay? Here's the next one. Calls added, puts are gone. Where are we now? Low of day. 17. What time is it? 10:30. This is where I covered my shorts. Why? Time of day functions. Refer to the masterclass, right? Time of day functions, 10:30 low. It always bounces. I'm not going to hold through this 10:30 bounce. Why? Because it's usually pretty popping. I'm not going to hold from here on 4 or 5 contracts from 14, sitting it till 40. I'm not doing that. Even if it comes and rolls back over, I'm not doing that. I am getting out, okay? If you use my RSI bands indicator, this was the exit, okay? Everybody laughs at RSI. Some of these indicators, these typical quote-unquote retail indicators, people just don't really necessarily understand how to use them, myself included, okay? Maybe they need to be tweaked a little bit. I'm sure the person that really made them knows how to use them great. A lot of times people are told to use them incorrectly. The bands really let you see it play out in real life and what RSI truly represents. It's a momentum indicator, okay? Let's go 1040. Here we go. 1040. What do we get? A bounce. Okay. Why? 1030 time of day function. Positive gamma down here. Your risk reward to try to get short at 15, looking for 00. You better not have put a lot of size there because you got about 15 points you're looking for after you just took 80. So if you did 1, 1, 1, 2, that was really wrong. It should have been 2, 2, 1, pass, cover, right? Done. Let me see what happens. If you want to take this, that's fine. The 1040 rollover, it didn't work. There's nothing wrong with that, okay? If you want to take this, I told everybody, the 45 put looks good. I don't like it. I'm going to pass. Why? I don't short 5 points in front of the vol trigger, okay? Even though we had gamma at 50, right? Positive gamma at 50. So we have resistance. I'm not going to short into the vol trigger. Doesn't work out. Pops. We get above the 50 gamma, right? Here's another spot to fade. Vol trigger target. You got to get out. It failed at the vol trigger. Pops. Longs might have got in here. Let's take a look at what's going on, because that's how that gets traded. And now let's look at it. So here we are, right? 1040. 1050 update. No puts being added. We got more calls. They're buying this dip, right? They're trying to get long this. It doesn't work out. Actually, excuse me. This is where the market gets squirrely, okay? And the factor is, this is the second part I wanted to point out. When the market is dominated by put selling, when we get close to these puts, big puts, you get a lot of squirrely price action. You get stuff that looks really weird. This is pretty weird, right? In my world. If you look at the QQQ chart, it was a lot nicer. This is pretty squirrely, right? Square, bottom square, up, down. This is put selling, right? Moving the market. Okay? Down here. Buying and selling of puts. You can't see that they bought the puts because it's coming from here. But you got to pay attention to it. So we bounce. Let's play this some more. Okay? Here we go. We bounce again. They fill the puts up, right? Puts get bought here. Guys tried to get short. Where? Here. Now let's talk about psychology again. They're trying to buy this dip. Calls get added. They get dumped on. A reasonable dip to buy. They try to buy this. They get dumped on. They try to buy this. They get dumped on. They finally figure it out. I'm bearish. I'm buying puts. And I'm buying a lot of them. Here's the pullback I've been waiting for all morning. I'm fighting the last war. I'm buying puts. Wrong. Why? Puts make the market go up. We're not trading path. This is a reference. We are fading participant positions. Acknowledging dealer hedging flows, right? That's what we're doing. Next update. Puts getting added. Look at the rip. These guys are saying, okay, here we are. Look at this. Punch down. I'm getting short. I'm getting short. Nope. Wrong. Why? Puts are getting added. So when you're saying to yourself, you're like, okay, it was a really violent down move, right? Market is super bearish. Everybody's going to try to go ahead and get short down here, and it's not going to work out. You got to wait, okay? You got to wait until they fight the last battle where they're like, oh, man, I missed the long, and they start trying to get long up here, right? And then perhaps you get some follow-through. I don't know if that's going to happen. It's only 12:55, but I'll play it back later, and I'm willing to bet you that's what happens. Here we go. Next update. More puts added. More ripping. Again, they try to short it. It doesn't work, right? Let's go to the next one. Everything kind of shrinks. We still get a bounce here. Let's examine it closer. This is... So calls get added here, right? We went from 800 at the money to 1,000. Okay? What had happened? Dumped. Where did we dump to? Where the puts meet the calls. Just so happens to be the hedge wall. This is a line in the sand. Unless calls build over these puts, we will not get through them. Don't believe me? Just watch. 940. Calls close. Rips. This was a bearish moment. In the chat, right? What time is this? Defer to the chat at 11:30. Guys were getting short. Okay? Guys were getting short. What happens? Market bounces. So here's a way you don't want to complain that somebody's posting in the chat. Why? That is a participant emotion that you should be paying attention to. Okay? People are the same, right? If you see guys getting short, right, and you're sitting here paying attention, you don't need to talk. You just need to pay attention. You know that the puts are here. You know it's not going to work out, right? Everybody's getting short. You don't need to get long immediately, but maybe you pass on that, right? And then you see it rips, okay? Let's go. 1150. So we get more put buying. Let's see what happens to these to the puts here. Do they sell more? Put selling brings the market lower. It also supports it. So a little fuzzy to see here. Right, so the puts grow. What do these at the money calls do? At the money call gets bigger. Okay, extra 100 brings the market down a tad. Next update. 12 o'clock. Look at the put. Look at the calls. Look at the puts getting smaller. See the calls growing? I took that short off these calls adding down here. I said, all right, cool. They're going to try to buy this, right? And then this is going to get taken over and they're going to get dumped on. Doesn't work out. Why? Because everybody else felt the same way too. So they added puts and we bounced, right? A lot of times, maybe my call outs seem super novel. I'm just trading failed breakouts. I'm fading participant price action. Fading participant activity. Still, where's the line in the sand? It's the hedge wall. It's the vol trigger, so we know better already, right? Even though we get below it, it's still fuzzy. I was short. I got short up here. I bought 45s or 50s, 45s or so, right? And I just got stopped out. I had an insane morning, absolutely insane morning. I got short pre-market. I doubled the size at the high of day, and I just chilled out. And I covered at 10. Second best day in 2 years. Thank you, Trace. I appreciate you. 12:30. The bounce. What happens? Calls get smaller. Right? Trader longs giving up. Now here we go. Now here's what I say about when you get up here, everybody's like, man, I got to get long. This thing's really going to break out. The thing's going green on the day. It's max euphoria. Right? You start hearing things like that. Are we going to go green? Right? Euphoria. You start hearing stuff down here. Oh man, this is going to be a 200-point down day. Max euphoria. Fading these things. Risk reward. Do you get short 10 points in front of a bunch of positive gamma? No, you don't, right? Do you get short 5 points in front of the vol trigger? Absolutely not. If it's an 80-point day, right, there's going to be plenty of path to play. You don't need to go and try to get short 5 points in front of the vol trigger, okay? Let's keep playing this out. Calls getting added a little bit up here. See him selling some calls up here. Selling calls, this changed to puts. That's a statement. This morning, that number that came out, we'll do that after. Again, we talk about what did they choose to soak up the event risk. They chose to do that with calls today. That's the opposite of what I explained in the Vanna Rally video. Okay? Participant positioning is important. They could have did that with puts. That would have put a floor in the market. Instead, they did that with calls. It puts a ceiling in the market. Okay? Next update. Here we are. Let's run it back one more time. Puts getting added here down out of the money. This strike is affecting price action here. I make it seem easy. It's not quite as easy as it seems. But over and over again, you keep watching. I don't watch this. This tells me not much. I defer to it to see if there's short strikes here, trader shorts, and trader longs. I need to know how that's summed. More than likely, there's still a bump there. So I'll peep over here. I already know what these strikes are. I already know that this is a positive gamma purple strike. It's a trader short, dealer long, positive gamma. I already know these are pink. I don't need to sit there and watch that. I need to see what they're doing, what they're adding. Look, we got some puts adding up here. 69.70. Last update. Puts getting added. 69.40. What's going on? Bouncing. Where are these puts? These are 35 puts. So these guys are buying these puts down here. We have positive gamma right here that we're stuck in. Okay? Calls are not really that strong right now. Everybody's still pretty bearish, right? So, back to this. When you see something like this, and it's a lot of pink, right? We know this is negative gamma. We know this can act in two ways. You could slide through it, right? But where those puts meet the calls, this is going to turn into a level. Okay? And now, fast forward. You could see this play out. Every time they get short, the market goes up. Is this why 99% of traders don't make money? It's pretty ironic that the direction that the crowd trades is the opposite direction of hedging flows, right? It's pretty interesting. That's really rough for somebody that doesn't have spot gamma education. I encourage you to sign up for spot gamma if you're watching this video and you are not a member. There are other services. They are not like spot gamma. This is very unique. Trace is very unique. The way this is set up, this is super, super important. Education is stellar. The room is popping. Okay, so we're going to keep an eye on this right here, right? And then we just need to remember, okay, event risk in the morning. We're in the midst of a bunch of short calls. This is resistance. This is resistance. Where is the big short call strike to get sucked into? Non-existent. There is this big put strike, right? What about seek and destroy? Okay? Keep it going. Dumped on them. They try to buy the dip. Dumps on them. We stop where the puts meet the calls, right? Calls get added. Dumped on them. We don't need to replay this again. You can watch the last video. I want to keep this thing short and sweet. 23 minutes. All right, guys? Make sure that you replay this day over and over again, and make sure that you're keeping an eye at where these levels meet and what's going on. All right? Here we are. We're waiting on an update. Should come in any minute. Let's hang out to the next update, and then we'll call it a day. All right? Might need a little restart sometimes when you replay it a lot. Should be any minute. We get this 310 update now any minute. Let's see what these guys are doing. Oh, I'm wrong. We just got the 1300. Excuse me. So we just got it. 1300 update comes at 13:15. You will get the next one. All right. Important to remember when option selling is kind of taking over a market. It's important to recognize that, okay? See how this plays out. We got a lot of these shorts over here, okay? There's dispersion. Even if the Mag 7 is dumping, a lot of times the index, right, doesn't move as much. Why? Gamma, support, all right? I'm going back to the lab. Getting late. We're going to probably have some afternoon moves, all right, guys? I hope that this makes some sense. I hope this reinforces things. I hope you had a great trading day. Thanks for stopping in.